Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Dugal. These are our headlines this afternoon. Indian stocks advance for the fourth straight session, led by energy companies and drug makers. Optimism that the ongoing results season will show signs of improvement.
Nobel Prize winner Richard Thaler says the stock market rally is making him nervous and investors may be caught napping. Another Nobel laureate, Paul Krugman, is not worried, but says there is a disaster risk that may not have been taken into account.
Piramal Enterprises is looking to raise 5,000 crores from foreign investors via debentures and rights issue. That's a Bloomberg Quint exclusive.
The GST Council may rationalize rates after 3 months, reduce taxes on goods of mass consumption and public interest manufactured by small and medium-sized enterprises.
The Supreme Court rules that sexual intercourse with a wife below 18 years of age will be considered rape.
And on the show today, Gautam Chochoria of UBS expects no fireworks from IT or bank earnings this quarter. Alice Vaidyan of GIC spells out the reinsurer's strategy to reduce its claims ratio.
All right, let's first get into the markets and see how things are looking. Pradeep Pandya is joining us with the details on the market structure this afternoon. Pradeep.
So after, Nifty moved above 10,000 yesterday, now Sensex is above 32,000. So that's the good news. If you look at the momentum overall in markets, mid-cap and small-cap are also doing well, but not as well as, the kind of momentum we have seen yesterday or day before. So let's see. In second half, usually, for last two sessions, we saw volume pick up and more stocks were kind of participating in the rally. So that we'll have to wait for. But it's interesting to note that, key important sectors that have been moving up. Oil and gas, of course. You have HP, BP, IOC, entire oil pack, and also gas, because some FIIs have also hiked their target price for GAIL. So this is one pack. And also, interestingly, you have telecom today moving up because of, that talks of KKR buying stake in Bharti. So not only Bharti Infratel, but Bharti Airtel has also moved up. So this is an unlikely area, actually, the sector that seldom supports the market, but good, today it's also helping you. So we have a constant buying interest in market. Index kind of opened up and is now inching towards day's high, but no runaway rally. But there is enough momentum in broader market for us to conclude that interest is actually on the buying side and the right trade is actually long at this point.
Interesting that Pradeep, let me also bring up one chart, and this is of the currency. The rupee was the worst performing currency in Asia last month. Take a look at that. That's according to Mizuho Bank, says the INR may slide well past the 66 to the dollar mark. Vishnu Vardhan of Mizuho Bank, one of the top forex forecasters as far as USD INR is concerned, ranked by Bloomberg, says a rupee slippage is unavoidable from these levels. A survey by Bloomberg also pegs the year-end target, that's a median target, for the currency at 64.50 to the dollar, and this is an interesting one, because earlier this year you expected the currency to turn the other way, and people were calling 60, but year-end target has swung from 60 to 65, 66. That's the currency for you, and you could probably see that in the earnings this time.
Absolutely, and I think the economic environment has changed as well, which is why rupee expectations have changed. Meantime, so far we have seen relatively limited risks emerging from the global markets. Those risks are low, but not everyone is comfortable with the seemingly gravity-defying move up. The low levels of volatility in stock markets have caught the attention of this year's Nobel laureate, Richard Thaler. He says in a conversation with Bloomberg News that the stock market seems to be napping at the riskiest moments of our lives.
Well, right this minute, I think the minuscule volatility in the stock market, not that I have an explanation for it, but it's certainly puzzling, and it's puzzles. We seem to be living in the riskiest moment in our lives, and yet the stock market seems to be napping, but being pushed up by some snail. I don't know about you, but I'm nervous. And it seems like when investors are nervous, they're prone to being spooked. And nothing seems to spook the market.
Well, that's one view of an economist, a Nobel Prize winner. Economists, like editors, never agree on the same thing. Paul Krugman, another economist, another Nobel laureate, believes that he doesn't see a bubble. That he believes that there may be a disaster risk that's not been taken into account by investors.
profits are high, interest rates are still very low, so it makes kind of sense for stock prices to be high given that. It's more, in this case, I don't see it's a really overwhelming bubble. I just think that there's a disaster risk that the markets are not taking into account. I am a little surprised that the market doesn't worry more about the downside of a totally catastrophic response if something bad happens. You know, what if we have something really bad happens and they handle everything the way they handled Puerto Rico? That ought to be some kind of weight on the market, but we know that markets tend tend to ignore those things until they actually do happen.
All right, back to the domestic markets. Earnings season is here again, and tomorrow we'll see it getting kicked off in earnest with TCS and IndusInd Bank reporting. They both represent important sectors of the economy, of the market. So we've got our research team giving us a sense of what we should expect, both from IT and from banking. Let's get across to Agam Vakil first on the IT preview. Agam, what is the expectation this quarter?
Well, not very great, unfortunately, for those who are long on the sector, because in terms of expectations, what we're really looking at is very subdued, outlook with respect to what we can go in and look at in the second quarter. Let's start off with the revenues and the way that we expect them to pan out. Just about 2.9% increase expected on an aggregate basis for the top 8 IT companies on market capitalization. On the other hand, profits expected to see even lower growth on a sequential basis at around 2.1%. Margins again expected to remain flat at around 20.7%. What are the challenges that the IT industry is expected to face in this quarter? Well, tepid demand in the BFSI segment, which continues to be the story even in this one, despite the fact that the management has continued to say that there will be an improvement, and this quarter again we aren't expecting too much happening. Of course, it's the digital transformation in the service delivery space is also something which remains a work in progress. And finally, of course, we'll also be looking at planned wage increases, which is to a certain extent factored into the prices to show up in the margins. What are the positives in this quarter? Well, we can keep an eye on the fact that the expectations are so tempered. Any negative surprises may not have a very big impact on stocks. Of course, it's the rupee strengthening against the US dollar could be something that could help margins. And of course, it's the mid-cap IT companies which are expected to do much better in comparison to the larger peers. What are we keeping an eye on in this quarter? Firstly, of course, the demand and the commentary on demand in the BFSI segment. More updates in automation, as well as several other large deals. Of course, client spending, which has been very inconsistent over the previous few quarters, is going to be something which is also going to be looked at. And finally, perhaps more importantly, any change in guidances. This, I say, is there is a very low probability of an upward revision guidances for any of the companies. However, should we see a very bad quarter for some of those larger players, where we could see a downward revision guidances. But that said, well, on the whole, we're expecting a rather tepid quarter for the entire IT industry.
Tepid quarter for the IT industry, says Agam. Thank you, Agam, for that. Let's wait and watch out. TCS will be the first one off the block for the IT space tomorrow. Shraddha is standing by to tell us how is it likely to look for the banking industry. Shraddha.
Well, it's likely to be the case of same old for the banking industry as well, because the broad underlying trends that we are expecting to see are going to be similar to what we've seen in the past quarter. So let's just look at how some of the broad parameters could look like for the banking sector, starting off with the loan growth. Now, the system banking industry loan growth remains subdued at 6.5% in the second quarter. You had the retail loans, however, which were resilient with a growth of 15 to 16%. So they could support growth to some extent, because corporate loans continue to remain sluggish during this quarter as well. Now, if we move on to the next parameter, which is the asset quality. Now, public sector banks are expected to report slightly lower slippages on a quarter-on-quarter basis. Having said that, we are also could see some pullback as far as the high retail and SME slippages that we had seen in Q1, but analysts believe that any sort of improvement in loan recovery in the farm sector will remain slow. Corporate loans are expected to remain under pressure, but no negative surprises are expected. But telecom sector is one that they're really watching out for. Moving on to the treasury income parameter. Now, ICICI Bank and SBI both are expected to book profits from the sale in their general and life insurance subsidiaries, which could boost that treasury income for them. But that apart, as far as most banks are concerned, they're expected to report low treasury gains because the 10-year bond yield in the second quarter had risen by 15 basis points to 6.66%. And lastly, when it comes to margins, again, they're expected to be steady to slightly negative due to the combination of three factors. One, the small cut in MCLR rates. Second, the reduction in savings accounts rates. And third, the high NPA. So all of them is expected to play out. But broadly, yes, the markets will continue to keep an eye out for the asset quality resolution progress going into this quarter as well.
All right, Shraddha, thanks so much for that. Meantime, that's the view on the consensus front. But Gautam Chachoria of UBS spoke to us about his own expectations, both on IT earnings and on banking earnings. Let's hear him out.
IT services numbers will likely be muted, but the key point here is that the expectations are already building that in. And we were negative on IT services sector for last 3 years. We didn't have a single buy-rated name, but a few months back we did turn tactically positive. As the point you mentioned, it's under-owned, valuations are reasonable, and more importantly, expectations are quite low. So for example, even in the first quarter where the numbers were not great, they didn't surprise markets negatively. So even for the second quarter, our view is that the expectations are quite realistic. And the numbers, while they may not be great, but unlikely to be a negative surprise. And at the margin, if the commentary has positive undertones, specifically from some pickup in US spending, that could be at the margin a positive. The trend will continue in terms of retail-focused private banks doing better than corporate-focused private banks, and definitely doing better than the SOE banks. Even NBFCs should be in a better shape. So we do expect some moderation in the mortgage finance given the data points we have, but they should still deliver robust top line as well as earnings growth. And even the private banks, even the corporate-focused private banks, while we could see muted earnings, there is a possibility of provisioning coverage ratio that could improve further in this quarter.
Gautam Chachoria talking about his expectations on earnings. Piramal Enterprises, meanwhile, is looking to raise 5,000 crore from foreign investors. At least 3 bankers have told Bloomberg Quint that some foreign fund houses have already shown interest, and the board will be meeting tomorrow to take a final call. Yatin, who broke the story, joins us with the details. Yatin, how do they plan to raise these funds, and what are they raising this for?
Thanks for that, Harsha. Now, if you look at Piramal Enterprises, they already have a board meeting slated tomorrow regarding considering various options for raising funds. Now, what we gather from investment bankers is that the total quantum of funds to be raised via combination of 2 things. Number one would be a compulsory convertible debentures to the tune of $500 million or close to 3,250 crores. Another tranche of $250 million will be raised via a rights issue, which will be of course priced at a slight discount to the current market price to the tune of $250 million or 1750 crores. This means that the total fundraising that Piramal Enterprises is looking at is close to 5,000 crores. Now the bankers also added the fact that since Piramal has been focusing on the financial services business, this fund will be largely used to augment the capital requirements of the financial services business and also the new vertical, which is the housing finance business, wherein they are expecting strong growth and demand to move in the next couple of quarters. So on a whole, 5,000 crores is what Piramal is looking at. Mix of compulsory convertible debentures. A lot of investors, especially pension funds, have shown interest, and not only that, almost $50 million of rights issues what Piramal is planning at this point in time. Of course, when we emailed to Piramal Enterprises, we did not garner any response as of now. But as and when we get any kind of a response from bankers or Piramal Enterprises, we'll let our viewers know.
All right, 40,260 crore. That's how much Thaler Teleservices owes to its lenders, the beleaguered telecom operator, which could be in a position where the group decides to shut it down this financially, although they have not confirmed that that is the preferred option. The company has not just accumulated debt, it's accumulated losses of close to 40,000 crore. Sajid Mangar joining us here in the studio with a breakup of all the numbers. Sajid, what's the relevant capital at risk here?
they don't have any capital for, first of all.
The capital for banks, not for them.
Both the companies, Tata Teleservices, Tata Teleservices and Tata Teleservices Maharashtra, both have negative net worth. So there's no the entire capital has been eroded for them. But from the balance sheet point of view, lenders have roughly around 41,000 crores of debt, which is secured and unsecured, of which secured is around 28,000 crores debt, and that is something would be a good concern for lenders, because if the company is going to shut down its wireless operations, how are they going to pay up? Tata Sons would have to service that debt, because there are it's been backed up by Tata Sons guarantee there. So that's one big issue which is going to come in. As I said, accumulated losses are more than 40,000 crores. Again, that's a concern. There has been the group as a whole, and through various funding activities, they have invested close to 50,000 crores in the last 2 decades in these two entities. Tata Teleservices Maharashtra operates in Maharashtra, Goa and Mumbai, while Tata Tele and TTSL operates rest of the India. So they are there, but the biggest issue which which we had also flagged off a day back, and Swami did an article on that as well, was they don't have enough spectrum to manage the scale it up, and so it would, and as Chandra has already pointed out, that they would need at least 50,000 to 60,000 crores of infusion to ensure that they scale it up to a level where it can be competitive enough. And so the other option is to wind down the operation of wireless, which they have already begun as per reports. The Tata Sons or Tata Teleservices did not respond to our queries there, but the concern still remains at the lenders front, where how the lenders are going to recover this money, and if wireless operations are going to be wound down, the only other operation which is left is a stake in power company, which is ATC. Again, ATC has flagged off a concern there, saying that you have a contract for more than 6 years with us, as per the agreement when you sold 51% stake in Viom, which is a passive telecom infrastructure. So you cannot get away from that contract, because...
So you mean the lenders will get a stake in the power arm? Is that what you're saying?
No. The lenders don't... the ATC, Tata Teleservices had a majority stake in Viom, which was a telecom passive infrastructure arm.
Correct.
They sold it off to ATC, 51% stake, and they got a good amount of money for that. They still hold nearly 33% stake, which is valued at around 4,000 crores. So that's one thing which is at where they can raise money. But the fact is that the major 80% or 90% of the revenues of ATC comes from TTSL. So if wireless operation shuts down, this stake is valued as nothing, because the revenues just go off for ATC as well. So that's a concern which is ATC has raised, because the deal with ATC happened in April 2016, and it's valid for next 7 years. So the revenue is at risk for ATC as well there. So there are creditors who, or other stakeholders who are going to object to a winding down of wireless operation. It's not going to be an easy job for Tata Sons to wind down the wireless operation. They will have bankers on one hand and unsecured lenders at one hand, which is 40,000 crores, which they have to handle, and they have other stakeholders which they have contractual obligations for many years.
Given this financial picture, both in terms of the debt they have on the books and the losses there, what kind of options would Tata Sons have? I mean, I know they've not officially come out on record and saying they're going to wind down, but the options seem extremely limited, isn't it?
Buyers, so I mean,
there will be no buyers. The only other option is to get a haircut from lenders, and that can only happen if you go to IBC.
A Tata company and IBC, they don't want to hear that. They don't want to hear that at all. All right, thanks, Ajit. This is a story which we will continue to track. It's a important one. Moving on to liquor, the liquor industry and liquor stocks are trading higher after GM Breweries posted an impressive second quarter. The company reported a growth in profit after 3 quarters of decline. Nikki Mirchandani is standing by with the details. Nikki.
Hi, Ira. So, impressive set of numbers coming in from GM Breweries. The revenue has grown as just 23% year-on-year basis to 385 crore in this quarter as compared to 312 in the corresponding quarter of the previous year. EBITDA has risen as much as 56% at 25 odd crore. Margins have been healthy at 25 odd percent as compared to 18.5 in the corresponding quarter. Pat, as you just mentioned, the company has recorded a growth in its profit after 3 quarters of decline. The PAT is coming at 46% growth at 16 odd crore as compared to 11 odd crore. So what has led to the impressive set of numbers? Well, good sales growth and the cost optimization measures taken by the company, employee expenses have declined as much as 22% year-on-year basis, while depreciation also has come down by as much as 6%. Now, this is a liquor manufacturer and distributor company with a market capitalization of around 822 odd crores.
Okay, that's the stock for you, Nikki. Thank you so much for that. The initial public offer of GIC RE opened for subscription today. At about 1 o'clock, the IPO was already subscribed 0.7 times, according to data available from the National Stock Exchange. Earlier today on IPO Adda, Yatin and Saloni caught up with Alice Vaidyan, Chairman and MD at GIC, to understand how the company plans to reduce its claim ratio, which is currently the highest among international reinsurers. Listen in.
All these foreign reinsurers who have now opened offices, they were anyway writing business in the Indian market from outside of India, and they had a 50% market share as well. So now that they have opened office, there is room for everyone to grow in this market, and we don't see any threat or competition from these big reinsurers who have set up offices in India. See, if you see GIC's combined ratio, it has been coming down consistently over the years. And last year we have recorded a combined ratio on a standalone basis within 100%. For the first quarter also, it has been within 100%. So that is the single most focus in GIC. We wouldn't want the investment income to subsidize our operations. And we also believe that as a reinsurer, we set higher standards for ourselves than the market. And we would definitely aim to have a combined ratio within 100. And that should be, the operating profit should be a natural hedge to the business.
All right, let's get back to the macro and the big picture. The GST Council is going to review tax rates after 3 months. Products of mass consumption, which currently fall under the highest tax bracket of 28%, will be taken up first for review. Here's what Nikunj Ori has picked up in terms of details on that.
The GST Council will review rates on items of mass consumption that currently fall under the highest tax slab of 28% after a period of 3 months. Now, the government would take a call, or the GST Council will take a call to review rates after a period of 3 months, because the government feels that prices post GST would settle down, and the government will have a clear picture of the revenue implications of any rate revisions. Now, remember, the GST Council had approved a concept note on rate revisions, which had a set of guidelines on revising rates, which the government would follow in case which the GST Council would follow in case it revises any rates in future. Now, according to the discussion paper accessed by Bloomberg Quint, it says that items of mass consumption, manufactured products by medium and small scale enterprises, and exports related items that currently fall under the 28% tax bracket would be considered for lowering after a period of 3 months. According to the same discussion paper, the GST Council will not look at revising rates on items that generate high revenues for the government and luxury and sin goods. Now, according to the same discussion paper, the government is of the view to rationalize rates going ahead in future and move to a single GST rate structure of 18% or a dual GST rate structure of 12 and 18% going ahead. According to an expert, if the government feels that there's a need to lower rate on certain items, it shouldn't wait for a period of 3 months and revise rate as soon as possible.
All right, that's the GST story. Meantime, there's an interesting meeting later today. I don't know if it's important because we don't know if anything will come out of it. That's the first meeting of the reconstituted Prime Minister's Economic Advisory Council. Harsha, it's a sort of motley crew of economists. There are fiscal purists on there like Ratin Roy, and then there are the likes of Surjit Bhalla, who have taken a completely different stance. Are very happy if the government were to expand its fiscal deficit.
Not to mention Vivek Dev Roy.
Yes, of course, it's being led by Vivek Dev Roy. So I'm sure the discussion will be extremely exciting. I would love to know whether something actually comes out of it. Probably not.
And this was the Economic Advisory Council that was originally disbanded when this government came into power. So it's been reconstituted at a time when the government has been on the mat trying to understand, if it's responding quick enough, or if it has ideas on the table to stimulate the economy. But what could their policy prescription be?
Yeah, that's, I think, the other tough part, that, you know, they're, to be fair to them, they're coming in at a point where a lot of the damage has, if you want to call it that, short term or medium term, some of the damage has already been done. You've gone through the demonetization cycle, you've gone through the GST pain. You don't know what visibility you have on government revenues. So at this point, if they are asked for policy prescriptions to revive, you know, the economy, their hands are tied, right? They don't have government revenues to work with. The central bank is more or less done with their monetary policy easing cycle. So what are they going to suggest? Perhaps, you know, there could be some, you know, individual sectoral suggestions, and I think some of the economists have said that as well, that let's, you know, fix some of the problems in individual sectors. So if power is a problem, let's see if somebody can come in. But I think at a big picture macro level, and I think, you know, we'll discuss this further with Uni, probably options are limited.
Let's get it. Uni Krishnan from Bloomberg News joins us from Delhi, who's been tracking that meeting. Uni, what do we know? I mean, this is, as we were just talking about, the fact that this has been constituted after this government, you know, originally disbanded. Now this council has been formed. What do you think is on the agenda of this meeting?
In one word, it's basically crisis management. This is the first time this Economic Advisory Council is meeting under the NDA regime and under the leadership of Prime Minister Narendra Modi. So essentially, they're looking at addressing three major issues. One is, how do we address this issue of growth slowdown? It's been 5 quarters since the growth has been slowing. So how do we do something that immediately arrests this slowdown, and then we start a recovery process? The other thing is addressing the issue of private investment or slowdown in private investment demand, finding banks money so that they can lend, and also possibly clearing off some of the bad loans issue. The final one is, you know, how do you keep prices in check? There have been some, you know, uptick in the consumer or retail inflation. So these are the broad macroeconomic areas, and it's all led by that larger issue that, you know, right now the popular sentiment seems to be turning a little unfavorable to the current regime. So how do you address it? And remember, you're going into election season where you'll have state elections back to back starting December.
Uni, you know, here in Bombay, I think, you know, the markets, particularly the bond markets, are obsessed with, will there be, you know, fiscal stimulus? Will we stick to our fiscal targets? I know, very sort of narrow focused here in Bombay. Any insights you can give us on the assumption that, you know, the suggestions from this PMEAC will have any bearing on government policy? Is this a council which leans towards, you know, easier fiscal policy or anything on that line, sir?
Yeah, you know, if you look at the composition of the Economic Advisory Panel, especially Professor Vivek Debroy, Surjit Bhalla, and others, you can sense that they are actually fiscal liberalists in a sense. You know, they would want some sort of a spending measure to be put in place so that, you know, you get immediate results. That's the larger sense I'm getting. You know, at a time when this meeting is going on, given from the public utterances of some of the members who make up this panel. Now, whether that is accepted by the government or not is a different matter. You know, at some level, officials in Finance Ministry are a little wary of a fiscal stimulus because that will upset the fiscal deficit numbers.
We'll leave it there, Uni. Thank you so much indeed for joining us with those views. That's on the Prime Minister's Economic Advisory Council. Ola Cabs, meanwhile, has raised an additional $1 billion from new and existing investors like SoftBank, the country's largest cab aggregator. Is also looking into another $1 billion. The company said in a press statement. Nishant is standing by from Bangalore to give us a sense of what they plan to do with this kind of money. Nishant.
Yeah, so Ola has raised $1.1 billion in a fresh round of funding from China's Tencent holding, giving it sufficient firepower to take a giant like Uber in India. Now, existing investors such as SoftBank and an unnamed US financial investor has also participated in this round of funding. Now, Ola said in a statement that it is actually aiming to raise close to $2 billion, and $1.1 billion is just a half of the money, and is already in talks with some investors to raise another $1 billion. What it aims to do with this money is, you know, it's gonna, it already is present in 110 cities, so it's gonna deepen its presence in India, it's gonna hire more drivers and go deeper into the Indian market. Uber is present in just 30 cities in India so far. Ola also mentioned in the press statement that it is also looking to invest in artificial intelligence and machine learning capabilities. It already has Ola Play that allows riders to, you know, stream videos online. So we will see Ola investing to increase the drivers and expansion to other more cities in India, and also in artificial intelligence and machine learning capabilities.
All right, Nishant, thanks so much for that. Before we close off the show, an important note coming in from the Supreme Court. In a landmark ruling, the Supreme Court today criminalized sex with a minor wife aged between 15 and 18 years. The apex court ruled that the exception in the rape law was arbitrary and a violation of the Constitution. Section 375 of the IPC, which defines the offence of rape, has an exception clause that says that intercourse or sexual act by a man with his wife not below 15 years is not rape. However, the age of consent is 18 years.
Well, out of time on the show. Thank you so much for joining us on lunch today.
Have a good afternoon.